Using U.S. housing data was stronger than expected. The Canadian CPI data came in as expected month on month, but the longer-term year-on-year measures were a little bit weaker. That has the dollar Canada moving to the upside. I'll talk about the technicals that are driving this currency pair in this video, so let's get started. It's no surprise looking at this chart that the dollar versus Canada has had a rough time with all the ups and downs that have occurred in the market over the last few days of trading. That is indicative of a market that doesn't know which way it wants to go, the traders that don't know which way it wants to go, the ups and downs, the swings, the geopolitical politics, everything that goes along with price action is pushing the US dollar, the Canadian dollar, in an upward and downward projection. But what I can say from this chart is that you see this blue line right here. Well, this blue line represents the 100-hour moving average, and over the last 1, 2, 3, 4 days, the price has been able to stay above that blue line. We also are moving away or above the 100-day moving average. That's this overlay blue line right through here, and the 200-hour moving average is also below. So we're above these three moving averages right here, which gives a bias more to the upside for this pair, despite the ups and downs that we're seeing. Now, what we saw, another level that I had earmarked from the price action is around this level right through here. This level comes in at the 1.3819, and the level corresponds with the swing high right here, swing high right here, swing high right here. We did break above that level trading yesterday and moved up to around the 138.30 level, but then came back down below that level and tried to hold resistance against that level in trading here today as well, and moved to the downside. But as you can see over the last hour, with the data coming out, stronger U.S. data, weaker inflation data, at least on a year-on-year basis for Canada, that's pushed that pair to the upside, and also trying to get above the high price that we saw from yesterday. So guess what? The buyers are making another play to the upside. So we'll see how all this continues. But what we know from a technical perspective is that these two levels are now risk-defining levels. 138.30 is really close risk. We just made the break above it. You kind of look for momentum on that break. But down here at the 138.19 is a closer trader's risk-defining level. If you want to be even more conservative from a technical perspective, a longer-term view, you can argue that these three moving averages down through here are where the price has to stay above in order to keep the bullish bias intact. If it were to move below those levels, then things would change. But right now, the buyers are more in control. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.